I want to go over the highlights of the day. The highlight was copper taking a trade on the short side. These are 4 contract trades. The short side and on the long side, we had one long side strategy that was down. We also are in on this trade, the next trade, going long on this home run strategy. And so that was a highlight. Crude oil was a small highlight in the 200K portfolio with the SR Counter Trend 2 trade. And then the Cobra Crude capturing a very small trade. The market rallied. We got in. It went kind of sideways. And then when we got out, then it rallied again. So our timing was off on these Cobra Crude and Cobra Aggressives to really catch a bulk of the move. So that was disappointing. And so just out of sync with the markets this week. And I'm going to show you the results on the day. We were down on the day, minus 47.80 in the 200K portfolio. Perspective is minus 360 on the week. And I'll show you the portfolio calculator here in a minute. 50K portfolio, 1450, minus 1450 on the day, minus 49.85 on the week. That was a tough, one of the tougher weeks in the 50K portfolio. Really out of sync. A lot of things went against us this week. Very frustrating trading week. I'm going to show you the trades on the day too, getting stopped out the lows and exiting at the wrong time. So let's look at the 50K portfolio. I'll show you the portfolio calculator. I'll show you the 50K trades next. Yesterday, for example, SR Counter Trend 3, crude oil, we exited here. Then the market has rallied since then. Soybean swing, we were short. Market ran up here, hit our stop on this bar, and then came right back down. Stop running market, questionable price action, in my opinion. And then crude oil, we got in here. Market started to rally, came back down here. It's just a small trade, got out, then it rallied again. So timing was off, just a small win there. Cobra 3, 4th loser in a row, minus 625 on that trade. And this is probably the most frustrating trade of the day, the most frustrating system. 2 points from the low. Got long here, great entry. Market starts to take off, comes down here, gets stopped out, 2 points from the low, and then it just rallies into the close. And the more it rallies, the more straight line that gets into the close. So just really out of sync this week, really disappointing trades, really frustrating trading. And what I've seen is the cycles is that things go from being really easy to really hard and almost impossible, and then they swing back the other way. So let's look at the 50K portfolio and 200K portfolio in the portfolio calculator. So here is the 200K portfolio as of yesterday, 17,310 drawdown. Today it would be at about a 22,100. I'll have the final results later on when I post this. And then the 50K portfolio is an 88.25 drawdown. And you can see here, 50K portfolio as of yesterday, it was 73.75, and after today's results, 88.25. And so you have to be willing to risk the worst case drawdown and give it a little bit of room because markets go in cycles. And so let's look at the drawdown curve on this and where we are on the month. So down, this is one of the toughest months, and this happened last year too. The first quarter tends to be strong, but in the 50K portfolio last year, January was tough for some reason, and we're going through another tough January. And we went through, after today, that would be about almost $8,000 draw, $8,000 loss on the month. And so intra-month, it's one of the, it would be, if that closed for the month there, that would be, I guess, the worst month this has ever had. And so, but it's not the worst drawdown. So it's had those drawdowns intra-month before. So we're looking for a bounce back here. It's not the intra-month drawdown. It's not the end of month losses that you look at. It's the drawdown curve that you look at. And so here are what the drawdown curves look like. So around 8,000, we've been here before, and so you want to hang in there on those worst case drawdowns. Let's see, 8,800 that is 88.25. So out of 88.25 out of 10,157. So you're $1,300 away from that worst case drawdown. So we're trading 10 strategies, and that averages about $1,000 per strategy. But that was a challenging day to watch all these trades, to see soybeans do this and then come right back down. It was a good trade. It started out as a good trade, and then we had grains day trader 3 get it short, and they just kind of stopped and they said, well, we're going to run your stop and then come right back. That's what it felt like, the stop running price action. And same thing with gap continuation reverse. It just wobbled and wobbled and wobbled until the long strategies got out, and then it reversed. So here's the soybeans trades. You see the grains day trader 3. This one actually was profitable. It's a 4-contract strategy. This had a break-even stop, and this was a soybean swing that lost on the day. And so these have tight stop losses, so $400 stop loss, $350 stop loss, and a break-even stop. This does not have a break-even stop, so that saved this one today, not having a break-even stop. Copper, like I said, was one of the highlights. This short trade was one of the highlights yesterday. I was looking forward to this long trade. And once again, the bias kicks in. I was favoring the long side, but the short side is what really gave us our profits yesterday, as this had a small winner on the long side, this had a small loser, and this had the bigger winner on the short side. So that shows you how your biases can affect your trading if you're not trading a system and you favor one side over another versus having a system that will get you in. Silver, no trades. Gold, sloppy market. Asia Gold 4 long here, kind of sideways, back and forth, back and forth. Gold reversal. Stopped out the highs today, or not the highs, but this swing high, and then it made another high, and it got long, and it pulled back. And so I guess I would say soybeans and gold are my least favorite markets right now. Natural gas, no trades today. Crude oil, like we already went over that. We did have 3 winners in the 200K portfolio today. This one was a nice trade, could have used a bigger profit target, and then these 2 had small winners. And now crude oil is at multi-month highs. Let's look at crude oil here. It was interesting to see crude oil based on the front months, 84.18, pull back $22. The low of 62.22, $22 pullback, and then it rallies all the way back up here. I think we're good for 100 this year easily, and yeah, so the trend is higher after making negative prices in April of last year. So that is crude oil. NASDAQ profitable on the day as well. Gap continuation. Had this short trade, wouldn't go, stopped out. Ultimately, the market moved higher, so okay with that. Gap continuation 2019 has been a strong strategy, and so this is one loser that we've had recently. Last week we had a 6,000 winner in this, so it's been one of the stronger strategies. It was due for a loss. So EVP1, due for a winner, got that long trade into the close. That one was on a 4-contract basis. This was up 3,900. So between these 2, plus 1,000 on 4 contracts, plus 250. And then we had QS3 at the open, plus 3,500. And then Cobra 3, minus 2,500 on a 4-contract basis. So up about $500 on the NASDAQ today on 4 strategies. 4 strategies traded. 2 were winners, 2 were losers. And then the ES was a big loser today. Gap continuation reverse. This strategy has really struggled, and today I thought it should have been a winner. 2 points from the lows down here, and we would have had a winner on the day instead of a loser, so that affected us by about $2,300. It was stopped. It had $1,000 stop loss. It was stopped out here. Got in at 46.28, stopped out by 1,000. Instead of exiting up here at, it would have exited at, I think, 15.10. Close 46.58. So 46.28, been 30.1 or $1,500 instead of $1,000, $2,500 difference in results if the stop loss had been 2.5 points bigger. Tick wave was short. I thought we were going down today. Market just, if you look at these unnatural patterns, see tick wave goes short, the market bounces, the market comes back down here to those JP Morgan buy the dip level, and it bounces again when it gets back to these levels where JP Morgan says to buy the dip, and then it reverses again unnaturally. And let's see, Cobra 3 stopped out on the day for this is 2 losers in a row on the ES. We had 2 winners and 2 losers this week on the ES Cobra 3, and then we had 60-minute breakout. Market dropped, stopped out, and then VIX OC after hours. Those all lost. Night trader. These are our strategies that take long trades in the after hours, and they all lost on the session. But the market closed higher than their entry prices. So just a very stealth market. It seems like it's going to go down, but then it rallies right back. This was the highlight of the day. Highlight of the week really is 60-minute breakout short at end of the week with 5 winners in a row going short. So we did find a way to go short. Was ready to pull the plug on this one, and this one had really struggled. And so ended the week with 5 winners in a row at 5K per contract, which helped mitigate some of the losses on the long strategies that had been profitable. And this is one of the diversities that we talk about. But still, overall, just a really choppy market all week long and tough trading. Really, the first half of January has been really tough, and we kind of did that last year, especially in the 50K portfolio. You see that here. So, this is as of yesterday. So last year January was tough, and then this year January is tough on the 50K portfolio. So choppy start. I like the first quarter, but the last 2 years it's turning out to be that January has a tough start to it. A little more perspective with the 200K portfolio is that we hit equity peaks on December the 27th. So if we look at December the 27th, what it's done since that time, right there was equity peaks on December the 27th. Last 4 days of the year were a drawdown, and then we had a terrible Monday, first trading day of the year. And then since that first trading day of the year, we're about break even. So if you exclude the first trading day of the year, the 200K portfolio was up 51, 55 going in today, and it's after today it's up about $400. It's up $400 since the first trading day of the month, and so there was an equity peak on December the 27th, 4 rough trading days in a row, and then since then we're up about $400. And so that's kind of the ebbs and flows of a diversified trading program. Markets are really tough right now with all of this chop, and we've endured the brunt of that going through a drawdown. The perspective, though, is after today we're in about a $22,000 drawdown, down about $8,000 a month on the 200K, and down about $8,800 a month on the 50K. And so those are the trades on the day. First 2 trading weeks of January, looking for a little bit smoother type market environment as there are cycles. And I think that after the extremes we've seen, we are due for some smooth cycles with no guarantees that they will be. But I just wanted to share that perspective with you for the portfolios as we go into the weekend. Monday is a holiday. Crude oil also rolls over to the next contract month. We are on February. We roll to March. March crude oil for Sunday night's trade. So make sure you roll to at CLH22. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.